The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And the first chart that I've posted into Tiger TV this morning is the chart of IBM. I hope their executives get a really big bonus, the board of director boys and the CEO and all the stuff, with the great deal they made of selling their company today. They gave the company $1.5 billion for taking it off their hands. I wanted $1.6 billion, so I just missed the offer. But would have been a good deal, I guess. I don't understand how that stuff works, but there's got to be something wrong in there somewhere. I know there's some pretty smart people out there, but how do you pay someone $1.5 billion for taking something off your hands? I think it would be easier just to close up the place, but maybe it costs more to close at 1.5. I don't know. All I know is the stock gap down below those multiple lows that we had there at the 175 level. And that's usually not a good thing. The Dow would be up a great deal if it weren't for IBM. And, of course, IBM might reverse and still be up on the day. Who knows? The one thing I feel pretty strongly about is that the load that we made on October the 15th. The reason why that's important is the fact that there were some cycle things there that were quite important. We're in this lunar eclipse cycle that occurred on the 6th. Of October. We've got another one due here on the 23rd. That comes in on Thursday. That was the 8th on the lunar eclipse, and the solar eclipse comes in on the 23rd. Whether the market's going to turn around and go back down again, as it has over previous times, I'm not sure. Whether it's going to do that. We had my co-author Shane Smolian on the program last Thursday, and he made a really good description of what was happening with the market from the astro point of view, and it certainly has played out pretty much like we had thought, or like he thought it was going to happen. The key date here to look at, if we're going to have a really serious low here in the stock market, will be most probably November the 13th. On a technical basis, this market is acting exactly like it did in 2007 and also again in 2008, 2007, where we came down. We made a lower low in the Dow, then we rallied up for 2 weeks. And 8 to 10 trading days, and then we rolled over. That happened several times over the past few years. That also happened in 1987. That's exactly what happened as we came in on the 22nd of September. Then we rallied into the solar eclipse of right around October the 8th, but the market topped on October the 2nd after 8-day rally right at the 61% retracement, and then that led to the crash. So the key here is to look at the low we made on that October 15th low. That was just below the 61% retracement in the Dow Jones Industrial Average. It was an absolute perfect 61% retracement on the NASDAQ. It hit it just absolutely spot on. So that's telling us that we should have a pretty good rally in here. Whether we're going to get it as much as we think, I'm not sure, but we'll have to, wait and see. But I'll post the NASDAQ chart in here, and you'll be able to see that we did make a nearly perfect. It missed it like 5 points in the NASDAQ, and so far the Dow has just about not made a 382 retracement. The NASDAQ hasn't even come close. But remember now, this is only the fourth day of the rally because we bottomed on Wednesday, so we have Wednesday, Thursday, Friday, Monday. So this is only the fourth day. We could easily get, 6, 7, 8 days. That would take us out into Friday. And then on Saturday, we have the Venus-Uranus opposition, which I think is the key to this, because if we rally into that Friday, then I think that would be a 2-week rally off of the low. Everybody would be feeling good again. And then here comes the hammer if that in fact is going to happen. If you'll notice, if we take a look at the New York Stock Exchange Index, which is the largest of all the indices, we did not take out the February low. We did go below the 786 retracement. We stayed below there for just a few hours on the 15th and a few hours on the 16th, and then it's turned, and we've rallied up to the 382 retracement so far today already. So it's still real early in the game, and with IBM down as much as it is and stocks not down that much, that tells you the stocks are pretty strong. There's buying come in there, and if IBM happens to turn, the stock market could really get legs and have another really big rally, because in those other years we've also had 61% rallies, and that would take the Dow back to that 16,600 level from where it broke down from. So that's the pretty much stuff that we're looking at. Anyway, this is one of the things that we're watching here. We also need to take a look at the VIX index here. If you'll give me 1 second, and I will pull up the VIX index, because we're having, as you probably all realize, we're having a great deal of volatility here today, and it's going to continue. We've had triple-digit moves in the Dow. It's becoming almost all the time now. It's just really been quite a bit. Now, the VIX index had a huge move. It actually tripled in price, which we think it's going to go much, much higher. I'll put that chart in here so you can take a look at it. Unfortunately, we certainly missed Basil Chapman, because he could certainly give us some input on this, but we're down a good 30% from the high already, and so it's having tremendous volatility, and that's really what you like to see. You just can't ask for any better markets than these. On a commodity note, I think it's very important today to take a look at crude oil, because crude oil made a 61% retracement. That's spot on. We're looking at December futures now at that 80-90 level. That was the 61% retracement off the low we made from last week. We had a 3-day rally, then the pullback today, and the low was exactly at that 61% retracement, and it's had a very strong rally, since that time. So that's also telling us that, we're probably getting ready to see a move to the upside, if nothing else, a good short covering rally in crude oil from that point. So those are, just from a commodity point of view, that's all I'm really looking at. I don't see a lot in gold and silver. Silver's lagging very, very badly as usual, but there's nothing you can do about that. It's neither here nor there. You've got to go on to the next one. Okay, now the next one I wanted to take a look at was the Dow Jones Transportations, because it hit some really spot-on numbers back on the 14th. It was 2 days before the rest of the market, but it made a perfect 61% retracement off of the April lows. And, they made a 61% retracement off of the April lows, and it made a 786 retracement off of the, let's try this again, Larry. It made a 61% retracement off of the February lows, and it made a 786 retracement off of the April lows. So we had two numbers coming in there, and the markets had a very, very strong rally, and I believe it's going to continue here through the rest of the week, and we'll see if the market will oblige us and start to turn down, towards the end of the week. That remains to be seen. So it does have a positive bias in here with the VIX gapping down like this, and what's happening, with the other one, which is the Dow Jones and IBM. All that means it. Now, if we take a look at the Russell 2000, and this is the one that has been, this is the ETF for the Russell IWM, you'll notice that we made a very big ABCD pattern down there at the 103 level. Again on the 16th, we're having another strong rally today. This market bottomed first. In fact, when the Dow was down almost 300 points, the Russell was hardly unchanged that day, and that was a key, at least from a technical point of view, that maybe the bottom was coming in here, and that is in fact the case. But it did make a perfect ABCD pattern here. Now, what's interesting about this ABCD pattern, the AB leg is 1, and the CD leg is 1.27 of the AB leg. That'll happen sometimes, and if you'll notice on the chart, the X to A leg was exactly 1.27 also. So you had a perfect butterfly pattern forming, and if you look at the wings of this butterfly, they're just absolutely perfectly symmetrical. If you cut them out and overlaid them on each other, they would be nearly, nearly perfect. I think the word that Basil uses is if you bifurcated them. I think maybe that would work too. I don't know, but who knows? We miss you, Basil. Come back and visit us. So I guess he's in Sydney. I'll be going to Sydney sometime in November to give a little speech, and then on to Auckland, New Zealand to also give a little speech. And we're looking to have some fun. We'll make a stop in Melbourne, and I'm going to get to see my good friend Bryce Gilmore, who's not doing too well, but hopefully he'll be a lot better eventually. Now, I think technically you have to look at the Treasury bonds and Treasury notes from a technical basis. And the reason why is during all this turmoil that we had in the middle of October, you'll notice that the Treasury bonds went up to the exact 786 retracement at 147.23. That was the high. The exact high tick was the 786 retracement of the high from 2012. That in itself is truly amazing. But even more amazing than not is that if you take this and look at it on a volatility basis and look at the 5-minute chart on the Treasury bonds, you'll see that we had a move of $6,000 up. This is one day, folks. $6,000 up, $4,000 down, $1,500 up, and $3,000 down. That's $11,000 in bonds moving in one day. Folks, this is the mom and pop's investment. They don't trade. This thing trades like pork bellies used to. This is not how bond markets act. And then if you look at it, after it bottomed, it rallied to a perfect 61% retracement the next day, up another 3,000 and down another 3,000. So we've had about a $20,000 move in bonds over the past week. And this is not the type of investment for widows and orphans, folks. This is how the markets really jump around. So be real careful in here. Watching bonds, because if they have another flight to quality and they get above 147.26, heaven only knows, or God only knows where they're going to go, and she doesn't trade. So we'll see what happens with the bonds. Now, if we take a look at the Treasury notes, which are the larger of all the markets, instead of making the 61% 786 retracement, the Treasury notes made a perfect 61% retracement to the exact tick at 130.14, and has since sold off. There's only been about a $4,000 move in the notes. They're rather quiet. Okay, we're going to take a little break here. We got the Dow rallying back, and we got gold up a tiny bit, and crude oil still down about $0.50 a barrel.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we have posted into Tiger TV the chart of the cash S&P index. And as you can see that it went down a little bit below the 61% retracement during that October 15th and 16th time period, and now we're having a little bit of a rally back. So that's actually a good thing, because I think we'll be able to sell it at a higher price here in a few days, especially if we're rallying into the new moon and solar eclipse coming Thursday. And then, as I mentioned, we have that Venus-Uranus opposition that happens on the 25th. That is really important. I hope you folks that have not been around very much had a chance to go online somewhere and pull up Art Cashin's comments. He's one of the deans of the New York Stock Exchange, and he reviews what happened in 1987 when we had the crash. This was the day after the crash, the 20th of October. It was a day of absolute, it wasn't as bad. The market was not down very much at the beginning to start, but it came back and rallied, but there was a little bit of less turmoil than was on the 19th. The 19th was total pandemonium. Nobody knew where they stood. Nobody was making markets. It was a total meltdown of liquidity. Then the Fed came in with the plunge protection team, which is equivalent to the QE 1, 2, 3, and 4. And then the markets, turned around and, made the major bottom. The important thing I think about October 20th from a historical point of view is that low that we made in the Dow at 1,666 was an exact 61% retracement from the low of August the 9th of 1982. That was spot on 61% retracement. And from there we went up 10 times to 17,000 over the next 27 years. So it's been one heck of a bull run. How much more it's got, and nobody knows, especially me. But all I can say is that the quality of the rally that we're having now is going to really tell us a lot of what we're doing. If we can only rally we're close to the 382 retracement today, but if we can only rally to the say 50% or maybe even 61% here this week, then that's going to tell us that the market is very, very weak, and the next leg down is going to be even worse. I do believe that the next really big expansion move that we have in the Dow on the downside will be 1.618 of the worst move we've had thus far, and that's 440 points times 1.618 takes you out to about 750. So we'll get close to the old record. The old record low was 777 Dow points down. This is when Paulson came on and told us that the world was going to end and all the banks were going to fail unless we opened up our wallets and helped protect J.P. Morgan and Citibank and Bank of America and all the other bankers that needed so much help. And I am certainly glad we did, because they saved us from Armageddon one more time. God bless them. Okay, now the second question that someone has asked me is the chart of Priceline. I know it's not Charlie, but somebody else, Atlanta Charlie usually calls me in on Priceline, but actually someone from Colorado called in and asked for a chart on it, so I'm going to get it up here and take a look at it, and we'll see how it's doing. It had a big ABCD pattern there that we were watching, and it hit it pretty much on, and we've rallied about 9% off of the bottom now in Priceline. And those of you that like the ABCD patterns, because it had two of them there. It had one from way back in April, and then we also had one that came down into this October 16th. Priceline actually made a lower low on the 13th of October, and then almost matched that low on the 16th, and now we've had a pretty good move up. We've actually already we have matched the low that we made. We matched the rally that we had during early September when it rallied well over $70 a share. This one has already rallied It's already rallied $80 a share. So it's doing a little bit better, and it's doing it very quickly because it's only taken 4 days to make this 9% move in Priceline. It's a technical chart to look at. I know most of you people don't look at it, but what it does do, it reinforces the fact that these Fibonacci numbers are very important. They're not the holy grail. Nothing is. And the patterns are very, very helpful, and the ratios are very helpful, and you try to put it all together, to give you the edge that you need, to try to get ahead of these markets. So that's what we're looking at now. We still got the S&P rallying pretty good, and crude oil has turned around and is now up on the day.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from Philadelphia. It's our good friend, John. Mr. Z, what's up?
Good day to you, Larry. We are awaiting your arrival here in the city of brotherly love.
Not of the first snowstorm, I hope.
Well, if last season has any bearing on the matter, then the answer to that is absolutely. Larry, I wanted to ask you a pattern question. Specifically as it pertains to where we stand with the S&P 500 cash today, I have myself have placed a fair amount of emphasis on something that I've seen in the past that applies here on the Standard & Poor's, namely the reference point of 1900 to 1905 on the S&P. And I recall it was it was maybe May 10th or thereabouts. The S&P made a stand into new highs, and the high at that time was like 1902, pulled back, and then rallied into right prior to Memorial Day weekend. Then the day after, the Tuesday, that would have been the 27th, there was overnight strength in Asian and European markets and Globex futures. And at that time on the 27th, the S&P gapped higher, leaving a breakaway gap in the new record high territory at 1905 down to 1902 or 1900. Then in August, with that sell-off that we had, the S&P cash tested, rejected that level, and for me, kind of proving the importance of that. And then on Friday, the 10th of October, there was weakness in cash and futures. I think the S&P cash closed right around 1905.6 that day, but the futures sold off hard below that level the remaining 60, 75 minutes. And then, of course, then we know what happened last week. So I've been of the view that left a big, massive supply of resistance overhead, and that it'd be likely to expect this bounce to fail to clear into that. That's kind of what I've looked at. I'm wondering, with your very, very many years of looking at patterns, is what I describe looking at something that you've used over your years? And if so, might you elaborate?
Absolutely, John. I think you have it described perfectly. This was one of the patterns that H.M. Gartley talked about in his book, Profits in the Stock Market from 1937, where markets will go back into their old support zones. In other words, we broke down from 1905 in the S&P, and so that makes a logical spot for when it goes back up. You know, people that didn't get out get one more chance to get out. They never take it, but they do get that second chance, to get out. And that's what I think we're looking at, is that we could get this rally this week up into that area, and we could actually go, because the market has been so bullish for so long, we could actually, go higher than that without any trouble, because, the bulls could come back in and, start moving it for whatever reason they want. But there should be really strong resistance between 1905 and 1915 in the S&P futures. That equates to about 16,600 in the Dow Jones. But that's a very important concept of technical analysis, how markets rally back to old support area, and that becomes resistance now. And there was a trader at Commodity Corporation back in '84 that I knew, and basically what he did, he used that like a fulcrum. He said, when it got up there, it was like a hammer, and you just get ready to to really get after it. And that was the bulk of his trading system, was based on that type of parameter, and it made good sense, because if it starts going much above it, then your theory is probably wrong. So it has to stop right where you want it to stop, or you maybe have something that's not correct, and then you just get out and wait and see what the next move is.
Yeah, that's kind of my thinking here. I often recall, Larry, a story I had heard you share back when I first met you, back probably 2008, after you joined the TFNN broadcasting lineup, and you had made mention of, in fact, you had segue here to Bryce Gilmore, and you were referencing the trading house in the California coast.
Oh yeah, Pismo Beach, yeah.
yeah, and your amazement of his applying a set of tools he was using to a bond trade, saying, gosh,
yes,
I'm shorting the bonds and my stop is 2 ticks away, and if it's 2 ticks away, I'm wrong, I'm out, I'm taking a loss. It turns out he was dead right, or the speculation proved profitable, let's put it that way. But I'm only thinking right here that we've got, the rules are not the same, but this pattern of that 1900 and 1905 breakaway gap Memorial Day weekend, the retest in August, the breakdown from it last week, affords us an opportunity, now that we've bounced literally virtually back within like 8 points of the level, to just try that on for size. And, if, as you just pointed out, if you rally up and through that, well, then you just cut back and say, well, okay, let's take another look.
We have some good history to back what you just set up, John, because that's what happened in 1987. We rallied from September 22nd into October the 2nd. In 2007, we topped in October. We came down hard, rallied up for 7 or 8 trading days, and then, you know, the world came undone. So we're doing the same type of pattern. The question is whether it's going to be, fulfilled the same way. When you mentioned that story about Bryce Gilmore, it was actually a lot more emphatic than that, because he said to me, to put the stop, I think the price was like 101.02 or something like that. It was close. I just know it was like that. And he said if they hit 101.02, he said, I'm going to take all these books, and they used an expletive that starts with an F and ends in a G, and throw all these books off the pier here at Pismo Beach and go back to selling cars in Australia, because he used to sell exotic cars, and they never saw 02, and that was the big break. But he was very emphatic about that. He never told me the reason why. And I probably wouldn't have been able to understand it anyway, but he was a very, very brilliant man. He taught me so much about how these things go up and down. Fortunately, I was able to keep the simple things that he taught me that I was able to use, because there's a lot of stuff is out there, and you just try to get a few things that will give you an edge, and that's really what we're looking at here.
Hey, can I lastly ask you, as we close, the book that you co-authored with Shane, when is that published, please?
Well, actually, today's the deadline. We have to have everything in today by 5 o'clock. We've got everything done. We've added an appendix because we had some new information that he discovered. You know, he's a really brilliant young man, and he works incessantly at this stuff, and he's got some things that we think are necessary to put in there. They're all based on probabilities, but they're all cycles. They are related to the astro component, and I think the book will be probably ready probably right after Christmas, first of the year would be my guess. Probably around February, given the way the deadlines for the big publishing houses go, because Wiley is very large. They've got thousands of books in print at all times. So my guess is it'll take 2 months, maybe 3 from the deadline, which is today, the 20th, and then we'll see what happens. But it'll be a very very good book, I believe.
Larry, I just wanted to say this in closing. If you need a manuscript proofreader free of charge, I volunteer.
Thank you so much, John. I will. If you drop me an email, I'll take you up on that. Okay.
All right, Larry. Have a good day. Thanks for your time.
Yeah, you bet. My pleasure. That, folks, is one of the best traders I've met here at my years at TFNN. He really knows his stuff. He's a really consummate technician and does a terrific job with all the folks in the Tiger's Den, which really makes it really fun. Now, I've got to bring a chart up here. We had a request to talk about Apple. Apple had a very nice Gartley pattern formed. It made a beautiful 61% retracement to the exact price of $95.25 off of the low we made in late June. And so that completed a Gartley pattern that took well over 5 weeks to complete, and the markets had a very strong rally of about 4% in Apple in just a matter of 4 trading days. So it did have a lot of power into it. Now the question is how much more we're going to get. We'll have to wait and see, but I believe that Apple's earnings come out today, and that is always a interesting phenomenon, because I think the odds are like 7 out of 10 that the market goes up after, I think out of the last 25 or 30 times Apple has brought out their earnings, I think it's like 70% of the time the market gaps up sharply. I mean, you don't want to fade, you do not want to fade statistics like that, folks. That's not a good thing to do. But they did hold the exact 61% retracement that we made the other day off of the low from late June. So we'll see if that's going to be the case. There's someone dropped me an email over the weekend and asked me the relationship that I talked about with the stock market in 1987. I covered that a little bit with John from Philadelphia, but all I'm doing is look at some similarities. There's a lot of similarities here. Shane brought those out when we had the discussion with him from his website. That's wolftrader.net. If you want to go see that report, just give him a jingle. Just go to www.wolftrader.net, and I'm sure he'll forward it on to you, and it shows those statistics that were there. And one of them, of course, is the Mercury in retrograde motion that we have going on at the same time that we have this now. We have the eclipse coming in. That's the same thing. We have the Venus-Uranus coming in. That's the same thing. And more importantly, and I wanted to bring this up and let you folks see it, because this is something that is relatively new to technical analysis, and I think it's going to be even more pronounced here over the next few years here when Shane's name gets out into the news and stuff. But this is the transits. I posted it into Tiger TV. You can take a look at it, and it shows how these transits hit. And you'll notice that on July 8th, when the market topped, we had a high number of positive transits. The market topped then. And then on the 25th, we had a very minor one, a very minor high. But then we had the really big one, if you'll notice, where we had a real negative one on August the 9th. And so what you want to do is look for extremes in this. And if you'll notice that July 8th was an extreme and August 9th was an extreme. Now, this is not something you're going to find in any bookstore, folks. This is relatively new material that Shane has worked on. We used Alfie Lavoie's Air Software titanium program that did all of this work. We had some ideas of how it was going to work, but until it was, empirically proved, we can't really say. And it's not 100%. I mean, it comes very, very close to being really good. But when everything lines up, like if the market's coming really down hard into one of these aspects, you can certainly say, well, it's working this time, so let's try to find a place to cover shorts and actually go long. And if it's going up into one of these, you try to find a pattern that validates a potential short sale where you don't have to risk very much, because it's all about risk control. It's nothing more than that. I mean, that's nothing mysterious about it. I've had a request to bring up that chart from 1987, and the question is whether I can find it. I probably can't right now. No, wait a minute. I certainly can. Just give it here a little bit, and we'll see where we are. As you can see here, I hope that came in. Yep, it did. After we topped on August the 25th, the market came down really sharply for 5 weeks into September, actually 4 weeks, into the 22nd, which was the solar eclipse, which was not the solar eclipse, that was the lunar eclipse. And then the market rallied up into the solar eclipse and then, started down. So the key here is that we had the same movement down like we had in 1987. We were down for a month. We took out the previous month's low, which we did here, July and August. And now we're in the midst of this rally that should be somewhere between 8 and 10 days. And if the statistics are correct, we should rally into Thursday or Friday with that Venus-Uranus opposition on the 25th. And that's important because that's the Fibonacci astro cycle, because Uranus and Venus has a 0.618 what's the word? I can't even think of it. It takes Venus 0.618 of a year to go around Uranus, and 0.618 of 365, of course, is 227. So it's right in the ballpark of it's actually perfect 0.618 of that move, and that's why it hits these numbers with the stock market pretty accurately, especially with the oppositions and conjunctions. They're by far the best of any of the things, that we looked at. There's been a chart that I'm sure many of you have seen. I'm going to bring it up here. It's the comparison. It's on the internet quite a bit. And it's basically the comparison. We'll show the chart and we'll talk about it when we get back from our break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I posted into the Tiger TV the chart of the comparison between 1929 and 1987, the crash years. All I'm doing is just trying to show you a pattern that we've seen in the past. It was 27 years ago that we had that in 1987. Before that, it was 1929 to 1987, which was 50-some years, 58 years, I guess. And so, 27 and 58 are relatively close. So I don't know if it's going to work or not. All I know is if it lines up the way that it's lining up now, it's worth paying attention to. It's only a probability. It's not a certainty. I believe that the volatility that we're having now with these 100-point moves in the Dow are coming at regular intervals is very important. But even more important than that, boys and girls, is what's happening into the bonds and notes. We're having volatility like we've never seen before. We didn't even have volatility like that during 1987. We had a 12-point move in bonds straight up, I believe on the 20th or 21st of October 1987. Then they, consolidated, but they didn't have the wild gyrations in one day, like we're having now. $11,000 swings in the bonds. Give me a break, man. That's mom and pop stuff. Widows and orphans. You just can't expect that market to do that, because that's not the characteristic of the bond market. That's really the safety. And when you have those wild gyrations, that's not a very, very good thing to have happen. Now, I wanted to talk about the currency markets a little bit, focusing on the euro, because like 1987, the big crash that we had was related to the currencies. I don't know if it's going to be this way again. All I want to point out to you is that the low we made 2 weeks ago in the euro was exactly at the 125 level, which was the 786 retracement of the low from 2012. That sets up a very valid trend line there at 125, and going below 125 in the euro would now set up price objectives down around the 110 to 109 level without any trouble at all, because that's where the 618 resides from the long-term move in the euro from 2000. Remember, the euro came out in 99. It came out at about 120, I believe. It went down to 85, almost on the exact birth date of my grandson, and then it rallied from 85. It doubled in price to 160, and since that time we've been trading between 160 and 120 back and forth with a bias to the downside. So this 786 is very important in the currency markets. Even if you don't trade them, you should be aware of that level of 125 in the euro, because if we break that, and we break it quickly, we don't get much of a rally here, then we're going to see, the dollar strengthen dramatically, and maybe that's the thing that makes Treasury bonds go to 160. I don't know. All I know is we live in interesting times, as the old Chinese curse is. So pay attention to that 125 in the euro. It's very, very important. We have other numbers in some of the others, but frankly, the euro at 125, because it's 53% of the dollar index, is by far, the most important of those things to keep in mind. So that's what I think is the importance about this week, is this volatility that we're had in the bonds. It's certainly telling us that's where we're going to be heading, and how much of a rally we get here in the stock market during this time. We also have to remain to see what's going on during this time also. Those of you that are in the commodity markets, keep an eye on gasoline and also on crude oil, because they might have bottomed. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.